I welcome all of you to today's session of Visual JForex, in which we will talk about the next indicator, which is the MACD EXT, kind of MACD's extension. This is basically based on the MACD, and its build and the functions are almost identical to the MACD. The difference is that the MA type, the type of moving average, which we use to calculate the MACD, here we get multiple options, and in case of the MACD, we had only single option. The SMA was used to calculate, and now here we can go as per our need, and we can do the customization, and that's why it's called MACD XT. Let's see what are the details and how we can utilize this indicator to build an algorithm on the Visual JForex platform, which we can then run on our JForex platform. Both of these tools are developed by the Dukascopy Bank SA, and they are pretty handy for any trader, regardless of your trading amount or the equity in your trading account. So here, as you can see from the short description, it is pretty much similar to the MACD, but with the controllable moving average type. So it's all boils down to the which kind type of moving average you are going to use in these calculations. And here you have to define this MA type, and that's how you can build on this algorithm, make indicator. So let's get to see how we can deploy this indicator, which is part of the moving averages. Now today is the turn of MACD EXT. So here comes the indicator. I hope by now you have got quite familiar that for our algorithm, the start point can be any of these three: on candle, on tick, or trade event message. So first thing first, we have to get this flow going for the structure which we are going to build next. Here you will have the brief description, the short description for the MACD EXT. Default instrument is taken as Euro USD, and which can be changed anytime you want. You can choose a different indicator. All you have to do is go for this drag down list and take an indicator of your choice. So all of these are supported by the platform. Now for today's session, we keep the default instrument as it is. We don't make any changes, and it is Euro USD. Time period can be of anything starting from 10 seconds to monthly. For today's session, let us try with something like 4 hours. I think 4 hours is a good time frame if you are trading from the perspective of mid-term to long-term. Shift is the look back period. Here you have to define if you want to take into account the current value or the value 1 candle period back or 2 candle periods back or so on. So you have to give this variable that much value, and it will go back in time by that many candle amount. Suppose for example, if we choose shift 1, then last candle's value will be taken into account for calculation of MACD EXT. So let us try with the 1, then the fast period, slow period, and the signal period. All these three variables which we had considered in the prior session, in which we talked about the MACD. Now the major difference between the MACD and MACD EXT is this controllable move MA type. Here you have this MA type. This is the data type, a new data type created as per the need of this platform. So here we have to define which kind of moving average we want to use to get us a bit of idea, bit of clarity on this count, let us try to add the indicator MACD on the chart, and then we will also try different type of moving averages to see which one serves our purpose best. So here is the MACD for visibility. Let us increase the thickness of the output. Okay, now this is MACD defined on the SMA, as you can see here at the bottom, that MACD is 12 SMA, 26 SMA and 9 SMA. So all these three key parameters, the moving averages are used are of SMA type, the simple moving average type. And please note these changes in value and how the structure is, and as and when we change this moving average type, we will see different kind of output, and it will be visibly distinct from the current structure. Let us try with some different price. We are not changing this. Let us go with the price itself, but let us try something different, like let us go for double exponential moving average, and straight away here I will try to make changes, and here you will notice the significant change which we see in this pattern. So as soon as I changed it to double exponential moving average from SMA, it moved backward. Now it has come forward. So these curves are happening later on in case of SMA, and they happen faster in case of DEMA. If we use DEMA again, it has a kind of less lag compared to the SMA. Let us try these as well. TMA. Okay, again here you are noticing the change, and if we change these two TMA as well, so the whole chart for MACD is now different. Earlier, as you were noticing, we had these charting in which the MACD was behaving differently, and now the whole point is that depending on which type of moving average you use, you will have this setup, and the overbought oversold scenarios will be marked differently in case of each moving average type. And now this is the case of TEMA on 26, 12 and 19 time periods. So again, let us try with some another moving average time. Let us go for HMA this time around. We change, even you can do a combination, like one you keep HMA, another you use TMA, and the third one, for example, you can use simply DMA, and in each scenario you will have these distinct indicator signals forming on the chart. And now if you were to use this crossover on the lower side as a bearish mark, then your trade for a sell positioning would have opened somewhere close to 22 GMT of 30th July, and that is somewhere here. So, and again from there on we continue to see the price action continues to rise, and eventually it goes on to touch 1.190 level. So that's why we have to be careful while defining this. And in case the reversal happening is the case here, so in such instances also it works both ways. Now here we got the move in the wrong side, actually you can say, as we had the crossover happening in the bearish side, but the price action continued to move, and then eventually it turned the corner. And here, as you can notice, we are getting this crossover signal earlier, but then the price continues to fall. So we have to observe these editing and then its impact, and that gives us fair idea of what kind of structure we can really rely on in determining the trend of the underlying instrument, and then the entry and the exit possibilities for our trading system. Many of these SMA we are yet to go into the details. In coming sessions, we will cover these all SMAs which we have not seen so far. We have done till DEMA, and apart from that, we have done the KMA as well. And eventually, I think by the end of this month, we will be well familiar with most of these moving average type indicators. Now again, let us change the combination to see what kind of results this algorithm is giving us. Suppose if we go for T3 in all these input parameters, but the curve is looking a lot smoother, as you can notice. And here in this case of MACD, the curve is also smoother, and even the change I think is happening at a more appropriate time compared to the last combination which we were using, which we were looking at. And as you can see, the crossover happens somewhere close to 11 or 12 GMT of 31st July, and that time is somewhere here. And if we go for a sell trade, we might end up in loss, sorry, profit most probably. And here, as the price has continued to consolidate with bearish bias, the Euro USD hourly chart of the MACD indicator continued to move lower, and then eventually when it looked like that the underlying instrument has entered into a bearish zone and now is consolidating on the lower side, some buying momentum is likely to come in. In such instances, we also get a move on the upside. A signal is being generated to go for a buy trade. So in such scenarios, what we can do is we try to take a couple of indicators. We try to build out a combination of different indicators and then deploy those indicators and get the backtesting done, so that we are kind of aware of the limitations of the algorithm on which we are going to rely. And also we get the second chance to go for if we have made any mistake or if any error is there because of the omission or the commission. So I think this is more often helpful compared to the plain MACD, as you have the controllable MA types, and because of that you can do a lot of experimentation and see which way it is likely to work better for generating the profits, the required profits. Everyone is behind or following profit, but not many can make it. So that's why it is considered so difficult and risky. Now we are trying for LWMA to see what kind of changes we get to see in the MACD output. I think in all these 3-4 combinations we have tried so far, the combination which involved the tree 3 was most appropriate, at least as per my assessment. But here you have to do the experimentation, and then you also have to try out with different time frames as well to get what kind of structure you should really go for, and then get the back testing done so that you are not running ignorant of the fact that of course loss will happen either way, if you trade manually or with the algorithmic system. Just that we have to keep in check the drawdown. And this is now charting on the hourly time frame. Suppose if we try 4 hourly, so here it comes again. We will have these ups and downs along consolidation, and again it picked up the momentum and it continued to rise towards 1.19. And I think many a times the Euro USD would have generated the buy signals if we were to use this. So that's how this indicator work, and I think this is at least if you were to ask me for my personal opinion, I do feel that this indicator is way better. Not way better, it depends on the context, but it is still better as we are getting this controllable MA type. Let us try to define one here as we were looking at the changes on the chart. Here also we can try out with similar changes, and of course we are not doing any back testing in today's session, but try to get familiar with these basic concepts, and once we are done with this introductory stuff, we will of course eventually we will be moving on to the earlier theme when we used to develop the algorithmic structures together. So that's how it is likely to work. Now let us add LWMA, and where has the LWMA gone? It's not. Oh, how is that possible? I don't know what has happened, but we have to choose as per the given options. So I think we can go with the T3. T3 was creating nice structure, smooth curves, and this 130 is smaller time frame signal period generator, and here also of course we need to define. Okay, we got it wrong. We remove the existing variable, and then we have to choose MA type, and we are going for T3. And again here we have this signal period and the signal MA type which needs to be defined, and here I think 9 should do enough, do well. And the signal MA type, as you have already seen, it can be anything. So let us define this. So we have changed these two MA types to the T3. Let us change this one to T3 as well. So that will be better for comparative purposes. And then we have to pay attention to the output values as well. We will be getting three output values. One is MACD, another is signal, and of course the third is histogram. And then depending on how you are going to define it, you can use this block on building, or you can say for building a new algorithm which might be of your own, or some even some pieces you gather from here and there and try to build after due optimization. Even that way it's fun. So this is all for today's session, and of course we will be back tomorrow for a fresh session with indicator which we are doing now. In recent past we have done MA types, the moving average types. So I think for next couple of sessions we will mostly continue with this. So till next 2 weeks we have to do and try to finish the moving averages type. So that's it from my side. See you tomorrow. Have a fabulous day ahead. Goodbye.